Welcome back, everyone. Triple Play is on deck, and I'm going to kick us off with Microsoft. Now, the company announcing layoffs to kick off the start of its new fiscal year. Now, this is not necessarily part of the wider range of tech layoffs that we've been seeing, as Microsoft does tend to make these sort of calls around the same time each year. Now, Microsoft spokesperson said the layoffs were not spurred by the worsening economic picture, but are a structural adjustment. Now, the cuts actually impact about less than 1% of its workforce, and it goes across different groups. But Microsoft also tightened its hiring in May in its Windows and Office groups, as well as citing unfavorable foreign exchange rates for cutting its income and revenue guidance in June. You also have slowing demand for PCs after that bumper period they saw during the pandemic when everyone was stuck at home. That's also impacting its Windows operating system business. The stock is down today, and it's down more than 20% year to date. But it is at least considered, unlike most other tech stocks, considered fairly valued right now.
Yeah, Rochelle, we know that the tech sector has really been suffering as of late. Microsoft, the latest company here to announce job cuts. It's important to point out, like you said, it's only 1% of their workforce if we're looking for a silver lining there. But they're one of a number of companies that have either announced layoffs or hiring freezes within this sector. So it looks like it could be a couple of rough months ahead for some of those larger tech plays. All right, I am looking at the travel industry. My play today is American Airlines. It's a top trending ticker on Yahoo Finance. The airline reiterating its second quarter revenue guidance despite volatility in the sector, forecasting a jump of 12% compared to the second quarter of 2019. Now, that would be its first pre-tax quarterly profit since the start of the pandemic, showing that the surge in travel demand is helping offset higher costs. Also, those massive flight disruptions that are plaguing the industry that we've been talking about now for weeks. Now, American upped its outlook for total revenue per available seat mile. It's a key metric for airlines. Now expects that figure to be 22.5% higher than 2019. American is set to report earnings after the bell next Thursday, July 21st, Dave. And it's going to be interesting to get a real solid look at the numbers and try to figure out how strong some of these airliners are at this time when we know it's been a very rough couple of months for the sector.
It's been a very long time since they actually turned a profit, so it'd be interesting to see that. And Delta had a nice day bouncing presumably off this. Southwest had a nice day presumably bouncing off this. And Boeing looks healthy right now. Best order in June, 51 planes, so they had a great day as well. Good day for the sector. My play is Starbucks. Some comings and goings for the coffee giant today, opening its second cashierless collaboration with Amazon Go. The new location on 8th Avenue in New York City opened today. It utilizes the order ahead feature on the Starbucks app and Amazon Go's just walk out technology. If you got all that, need to take notes here. It also includes an Amazon Go Market and a lounge area. You have to access that with a credit card or your iPhone. Going from Starbucks, 16 stores are closing out of safety concerns for employees. Starbucks citing drug use and other disruptions, other crimes as well. The company's saying in a statement, we cannot serve as partners if we don't first feel safe at work. Starbucks said it would transfer all employees to other locations when they permanently close those stores. As for shares of Starbucks, they are down nearly 33% year to date, presumably on those China lockdowns as well as the unionization movement across the country. And that may be why they're closing some of these stores to pay attention to those employees. But today, the stock really flat, just down marginally.
And it really does put the employees in a bit of a pickle here. Obviously, they wanted some of these concerns addressed, not necessarily to have the place that they work actually end up getting shut down. So we'll see how much of that is union related versus safety related. A lot of gray area there to keep an eye on for sure.